Hello guys, welcome back to the channel, and today we're talking about support and resistance. I told you a support and resistance trader. However, before I transition to totally support and resistance, I learned a lot of trading systems. For example, demand and supply. I learned about alchemist. I know the alchemist, at least the principles and how the storylines are created. I've been teaching them on the channel. I learned about break and retest strategy. Then what else? There is that one strategy, trend lines strategy. I learned all that, but then after doing my own research, I transitioned to support and resistance. Why did I transition to support and resistance? And guys, subscribe to the channel. We are at 92 subscribers, almost hitting 100. So today I want 8 of you to subscribe. We get 100 and then we target now the 200 mark. So why did I transition to support and resistance? I found out, okay, I came to study that one of the oldest and the most used strategies in forex was support and resistance. That is one. It is a fact. That is one. Then the second reason, and it is the major reason, is I found out that the key elements or the core elements of most of the remaining strategies, it is support and resistance, guys. It is support and resistance. No one can tell you otherwise. All these other strategies, they revolve around support and resistance. Yes, people of demand and supply sometimes bash support and resistance, but I can assure you, after learning demand and supply, I know for the fact that the best setups in demand and supply, the A plus setups, the setups they call A plus, involve support and resistance. Yes, that is a fact. The setups these people call A plus setups in demand and supply, support and resistance is there as a key factor that makes it an A plus. As a must, you cannot have an A plus setup in demand and supply when you don't have support and resistance included. So what does that show you? Later in the video, I will show you what our people call an A plus setup, and I think I can see one here. You see, for an A plus setup in demand and supply, you must have three things. The trend should be on your side. That means if you're in an uptrend, you should be trending in that uptrend. That means you should only be buying. The trend should be on your side. Two, that area has to be at an area of support or resistance. In case of if the trend is an uptrend and you're looking for buys, the area has to be at support. Then three, you must have a valid demand zone. A valid demand zone should have an indecision candle. It should have a big impulse away from that indecision candle, creating an imbalance. It has to create some liquidity sweeps, and then you'll be looking at that candle for buys. Now, in that one, you see there is an element of support and resistance. A trend line can be there, but it is an option. Support and resistance is like it has to be there as a must. Then two, that is three. Then four, if you go to a strategy like the alchemist is combined with S and R, that is support and resistance. You cannot have alchemist without support and resistance. Why? Because alchemist deals with precision, and that precision is based on the A, the A, which is the resistance, and the V, which is the support. I think, guys, you get me. Then you have trend lines. You can draw trend lines and they meet very well, but if you want to get an A plus setup, you have to get that one that has a trend line, that has support and resistance passing through it for the trend line. I'll give you an example. We always have people who trade trend lines, they will tell you 3 touches of a trend line. It is there. It is what does the magic. Okay, so let's get, this is 1 touch, 2 touches, and I'm picking this randomly. This will be the 3rd touch. Let's draw the first one, connect it to the second one. You see where the 3rd touch happens? It is at this place of support, this support that I draw here. This is where the 3rd touch happens. So literally, when the price comes here and starts rejecting on the support and also touches the trend line or rejects on the trend line, you know that you're going for longs or you're going to buy. So that's just a brief strategy, a brief background about this. But for me, I transitioned fully to support and resistance because support and resistance is like the core factors of price action. When you remove the head and shoulder, double top, double bottom, triple tops, triple bottoms, and then the QM, support and resistance has to be there. So me, I transition officially to support and resistance, and these other factors, I use them as confluences. But the key strategy is support and resistance. So my support and resistance tells me when to buy and when to sell. I'll give you an example. I can tell you, when you use support and resistance, it is so basic and simple. Basic and simple. You just have to add risk management and you're good to go. Okay guys, let's now come to support and resistance. So I want to show you, I told you my support and resistance tells me when to buy and when to sell. Okay, now where should I, okay, let me come here. This is a clear resistance. So price here, this is the Monday 13th Feb 2023. Price came here, rejected, and poured down massively. This is the weekly time frame. Immediately I see price rejecting and pouring down here massively. I just knew this is a resistance. So what will I do? I'm going to draw my resistance bar here. Remember, it is only price action in this area. So I draw my resistance bar here. What is my expectation? What I'm expecting to see is that when price comes back to this area and I start seeing bearish price action or rejections in this area, I'm looking to do what? To sell. You get my point? I'm looking to sell. That is where I say now resistance has told me that I'm looking to sell. Why? Because price has reached here first and there is this rejection here. So that means I'm looking to sell. Immediately price gets there, I've gotten a trigger. No, not a trigger. I've gotten an idea that I'm selling. This is not some basic random stuff. This is based on history on price action. Price came here and sold massively. It simply tells me, if I'm telling a story, it simply tells me that whenever price gets to this price area, price level here, the sellers come in massively. The sellers are interested massively. So they sell the price massively to at least a month of bearish price action. So I'm expecting that when price comes here again, obviously they will be interested because this is the price level that they always make profits from. So when it comes back here, they will be interested and they are likely to sell massively. Remember, nothing is a guarantee, but at least this one gives you a clue that now, since price has reached here, we are looking for sales. So now, why do I say that? Now I use the other factors as confluences. It's because now what the price has reached here, now I'm looking at other factors. One, chart patterns. So we have a first top and then a second top. This is a double top. That is one. If you put your people who use indicators, if you add a confluence, put your RSI or some oscillator, you're going to see a divergence here. You'll see a double top, but on a RSI, you're going to see RSI here, it's going to be high, and here it is going to be down. What does that tell you? That the buyers have lost momentum on this second top. That is 2. Then 3, I'm going to look at the candlestick patterns. In most cases, I always want to see a pin bar, an indecision candle, or an inverted hammer. There is a hanging man, but that one I don't trust it a lot. But a pin bar, any indecision candle doji, or an inverted hammer. That is also another confluence that shows me that we are going down. You see how I'm building my case to sell price at this level here? That is true. Now, the third one is demand and supply. Now, demand and supply only comes in when I'm looking for entries on the lower time frame. Let's say the 4-hour. I'll go to the 4-hour to look for any supply zone, since I want to sell any supply zones that are there. And strictly I got the supply zone because I want to sell at a low price, giving a fewer pips of stop loss. But I don't mean, because now if you're using demand and supply, let me be sincere, if you're using demand and supply on this pair here, AUD and ZD, on the weekly time frame, you rarely going to get supply or demand areas. Why? Because it leaves a lot of wicks. Remember, a valid supply or demand area is an area where price action has not yet tested, an area which is clean. That means a wick has not gone through that area. That is an area we are looking for. A supply zone, it is that open price range that we are going to test as a new area. Now, if you're looking for such areas, you'll get one here this week, and this week they don't touch. You'll get one here this week, and this week they don't touch, which is now being tested. Where else? Like, it is going to be hard for you to get such areas because this is not a pair with a lot of volume, and it is not among the majors. So it is going to be hard for you. It leaves a lot of wicks behind. It's going to be hard for you. But with my strategy with support and resistance, it is going to be easier for you to spot these price areas. You get my point. It's going to be easier for you to spot these price areas. Okay. With that being said, I add break and retest in support and resistance. These have been strategies that have been used ages. Break and retest. Very basic, people ignore them because they have now gone for the advanced demand and supply alchemist, which are also good strategies. But how do they fare on the high time frames and on the non-volatile fares, and also on the non-majors? How do they fare? This one, support and resistance, works across crypto, anything across. So now let's continue. So now that I've built my case, going to the lower time frame, I'm going to be selling. Stop losses have to go at the previous high. This is the previous high here. That's where I put my stop loss. I would have backed some pips there, around 300 pips. Now, and I wait. As I'm trading other instruments, I wait for my price action. My job is to wait for price action to come to this area, this resistance level, and I'll be interested. So now I'm going to wait. I wait for some time, and then price action comes back to this area. And what happens when it comes back? It creates this bullish rejection candle, and then the next day, in the next week, it forms a doji, an indecision candle. I told you these are the things I look out for. Indecision candle, a big rejection candle, and then inverted hammer, pin bar. Those are the things I look out for. And now the next week it forms an indecision candle. You just know it is going down. So you can sell immediately. Put your stop losses below the previous high. Why do we put below the previous high? Our view is that if price can go past the previous high, then we don't want to be in that trade. Maybe the trade has changed. The trend has changed. But as long as it keeps below that high we are selling, look at what happened. You sold up to here, and when it reached here, you removed your profits. Why did you remove your profits? Follow price action. This is a low, this is a high, this is a lower low, and then this one made a QM higher high, lower low, lower. This is low, lower low, high, higher high. This is a QM. That means now the trend had changed with the formation of this QM. So what was coming next? We were coming to form a head and shoulder, and then start now going to the upside. You can't see that very well. Come to the line chart. This is a low, this is a high, this is a lower low, this is a higher high. So when price comes back here to make an inverted head and shoulder, the trend has changed. You know the reversal patterns. The trend has changed, and now we are heading to the upside. So that means when we come to this resistance, we are likely to blow up. Why? Because the trend has changed from here, from downtrend to an uptrend. Guys, these things are supposed to be simple, but we make them hard by introducing very many things. Those other strategies work. They really do work. That one I know because I've learned them and I've used them and I've made some little profits with some losses. But they do work. However, I find that they work very well on the majors: USD JPY, Euro USD, GBP USD, NZ USD, NZ USD CHF, and then which one have I left? USD CHF and USD CAD. They work very well on the majors because they have high volumes being traded every day, and they are not so volatile like these other pairs. They also work on gold very well, and somehow Bitcoin. But Bitcoin has a lot of wicks, so it disturbs them. But on gold, it works very well. But when you come to these other pairs, it is going to be hard, and that's why you see most people who are trading support and who are trading alchemist, not necessarily alchemist, okay, what, but demand and supply mostly, demand and supply, what else, demand and supply, trend lines, mostly they're trading on lower time frames, that is starting from the 4-hour going down. Why? Because in order for you to trade only the majors, that means you're going to have few trades to trade within a week. So in order for you to maximize the number of trades that you're taking, you're going to drop down the lower time frames because they happen frequently. So if you drop down the lower time frame, that means you're going to be prone to market noise and also a lot of false signals for you to enter. That's why you see lower time frame traders lose a lot of money. Yes, they take many trades and make many more profits, but they lose more trades. Why? Because they trade on the lower time frame. Now for me, let's say for example, I'm trading only this asset. I'm going to draw my support and draw my resistance. I know that when price comes here, it turned around, and then I draw my support around this area. And then I know when it reached here, it turned around, I draw my resistance here. So what is happening is, I'm going to take a trade here. Let me show you. I'm going to take a sell trade here. Put my stop losses below, that is 97 pips. And I tell you about stop losses. I prefer using 100 pips stop losses because my trades are derived from the higher time frame, like the weekly. So I use my 100 pips stop loss. My target will be down here, which is going to be 300. That is 1:3.9, 380 pips. And how long the trade is going to take? 1, 2, 3, 4, 5, 6, 7. It's going to take 7 weeks. 7 weeks, that is 1 month and almost 2 months. So I've taken one trade. If I entered lot size 1, I'm getting $4,000 in 2 months. That is around 15 million Ugandan shillings in 2 months. So I've entered my trade and I've waited for 2 months. And now what is happening is, when the 2 months end, I'm going to be at this area. You see, with this rejection, it will hit my take profit, but I will not enter immediately. Why? Because it did not reach my support. I'll wait. As long as anything is still in the middle here, I'm not looking to enter, as I take note of price action. So now what is happening is, it is going to come down here, it's going to go up. When it comes down here, I'm interested. Why am I interested? Because I know that now it has come to my area, but I'll not enter immediately. I'll enter on this candle because this one will close, and then I'll wait for this one to open and see if it is going to come and clearly touch this area before it starts going up. The moment I see a good touch and it starts rejecting, that is when I'm looking to enter. I'm not trying to enter on the weekly. I always enter on the daily. Stop losses have to go below the previous high. Obviously, I have the money for the stop loss because I've just won 4K from the previous trade. But after 2 months, now I'm taking another trade after 2 months. So I'm taking another trade, and then I'm taking it to the previous resistance, because I know when it is going, this is why it is likely going to turn back from. So now 1 2 3 4, it takes 4 months for me to get 4,500. So in total I've made around 9k, which is around 30 million in how long? In 8 months. 2.5 plus 4, yes, let's say in 7 months in total. I've taken 2 trades. I've made 9k. How much have you made in what you're doing in your strategy? How much have you made? And when I reach there, I'm looking to sell because we are at resistance. When I reach here, I'm looking to sell. Guys, I don't know how yours works, but me, I think this support and resistance is the easiest and the best way of trading, especially for beginners, people who are not been in the market for more than years. Me, I've been for 1.5 years, but I've worked through the strategy like any beginner, disorganized beginner would be. I've moved through many strategies, trying to look for that one shot that is going to help me get to profitability. But I can assure you, every strategy is going to have losses, every strategy is going to have wins. Now, if you know that every strategy is going to have losses and every strategy is going to have wins, wouldn't you stick to a strategy that is easy than going for a complicated one and then at the end of the day you lose? Me, I think it makes sense because now I know that regardless of whatever I do, at some point I'm going to lose, at some point I'm going to win. Why would I go for something that is hard and then I end up losing as well? Something that is complicated, that's going to disturb my mind, distress me when I've lost, but still I'll end up losing. Why would I do that? Why would I do that? I would like to go for something that is simple. At the end of the day, even if I lose, I know I did not struggle. I did not struggle to lose. I just lost because maybe it was not my day price action did not accept, or there's something I did wrongly. But in a simplest way, a 3-step trade strategy, instead of having something so complicated and then you end up losing. It frustrates, right? So that is the point. So I'm not saying that you leave your strategy and use mine. No. And by the way, this is not my strategy. These are all strategies that are created with people by people we don't even know. We just pick them, learn them, and start using them. But me, the moment I started seeing that support and resistance is each and every strategy that is out there, that is when I knew now, no, this is the fundamentals of price action. This is what I need to use. So what I do, I use the QM patterns, I use supply and demand for entries. I just use support and resistance as a confluence. I use these other things like double bottom, because now I'll tell you, for example, this was a double bottom, double top, because price reached here and now it has come back again. So I use this one. This is my resistance. I want to sell, but also I'm seeing a double top. That means the double top, we are going down. Already I know we are at resistance, we want to sell, and then I see a double top, then I see this big pin bar, and then I go to the lower time frames and start seeing bearish price action, those change of characters and whatever. I have a strong signal of selling. I have built a strong case of selling than buying. So why would you want to buy here? Why would you want to buy here? After all that. So I've used chart patterns here and also support and resistance. Double top, resistance. Then candlestick pattern, spinning bar. We are going down, guys. And now what happens is there's a triple top. This is one top, second top, third top, making a triple top. And then you have a rejection candle, and then you have an indecision candle at support and resistance. An indecision candle at support and resistance. And the next week, what happened? We formed an evening star where you have a green candle, indecision, and then a bearish candle. So we formed an evening star at support and resistance. And this is a triple top. We are going down. And look what happened here. You have one bottom, and then this one was a second bottom. You went up. And then this one was a third bottom, triple bottom, double bottom, triple bottom. We went up, guys. Okay, that is all from me. That is what I want to tell you about support and resistance. Learn how to draw them very well. I'm not selling any courses. I don't do account management for anyone. I don't trade for any person. I just come here to share my free knowledge I know about trading. I don't have any courses to share, and I don't think I'm going to make any course for anyone to come and buy and whatever. No, this is my free knowledge that I share. The only thing I get from you are the subscription and the views that you make. So I'm not sharing for anything that, oh, you come and join my mentorship. No one is joining my mentorship. For me, I believe I'm not yet that super profitable, but I believe the moment you become profitable, I don't think you have time to teach people. Okay, you have time to teach people, but that mentorship thing that, oh, I have classes, come and attend classes. I want to trade for so and so, I'm going to give you signals. I don't think you have that time, because that stress, the stress you get from trading and the stress you get from not giving people signals or giving them and signals and they lose, it's just too much. I don't think you would want to have that stress. Okay, guys, today has been for yapping, and I've yapped a lot, but I'm thinking about one thing, guys. What I'm thinking about is getting. I want to be more on. I want you guys to see the person who is talking to you, such that you don't say that it is a robot talking to you. So I'm going to get a camera, and soon I want to start having those video talks whereby when I'm doing the analysis, you guys are seeing me. Hey, you guys are seeing me. And something I've seen here, I think it is a trend line. Before I switch off this video, you see, I want you to look at this trend line very well. You see this trend line? Let me put for the line chart. You see, I've drawn it very well on the line chart. There's a touch here, there's a second touch here. Now there is a break of the trend line here. Not a third touch, a break of the trend line. And then a retest of the trend line, and we fell down. So now, where do you see the retest happening? There is a break here. Where it breaks is where I have my support and resistance. Where this is where my support is, where this price action is breaking, and this is where the trend line is passing. And after breaking the trend line, the price comes to retest the trend line, but also retest the resistance. Now when price action is up here, it is support. This is one touch, two touches, using it as support. One touch, it goes up. Two touches, it goes up. It's supposed to go up. Then the third one did not hold, it broke. So when support is broken, it turns into resistance. So the support was broken and it came to be retested. This is a break and retest. It came to be retested. When it was retesting, at the same time there's a trend line that was broken, that was being retested at that area. Guys, you see how the case is built. You just know this is a high probability trade, and it is going down as crazy. So how do you enter here? Here you would enter with supply and demand on the lower time frame. So you first come to the daily. Do you see anything that can trigger your entry? Yes. Where do you see that thing? You see that there is a demand zone here, this candle here. There's a demand zone. But now the problem with this is that the SMC traders would not qualify this as a demand zone, because yes, there is a drop, base, drop, very good drop here. But now the problem is that in this drop that you see here, there is no imbalance, there is no fair value gap. The imbalance is not there. Why? Simply because this is not a major pair. This is AD and ZD. They rarely leave the imbalances. They rarely, because they have a lot of wicks. But if you consider that and you say, okay, I'm not going to consider the wicks, let me only consider the candle bodies, there is a supply zone there. And that supply zone is at a place of support and resistance. This is support, 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 support. It was broken. Now it turned into resistance. This will be a high probability trade for people trading demand and supply. Stop losses have to come here, but I don't want stop losses. My stop loss this tight because I don't tell price action what to do. So I'll put like 45 pips up there and look at the drop. That is 1:5. You got 270 pips. If you held on longer, you would get 351:7. But where did you build the case from? From the weekly, where from the break of support turned into resistance, break of the trend line. Guys, there's nothing you're telling me. Okay, guys. So that is all, and that trade I've just seen it randomly. So I'm going to be teaching more about support and resistance. This is going to be a channel where you come to when you want to learn about support and resistance. Also be doing it for the lower time frame traders. Also, what else? I'm going to get a camera such that I can be seen. You people can see me when I'm giving you analysis, such that you don't say, "Oh, this guy is a robot." Not a robot, guys. Remember, price action is king. Price action is king. You can do anything you want, but just use pure price action. Even when you're trading your strategies, add price action. Your level of accuracy is going to be high. You're not going to win 100% of the trades, but 90% you might not win them, but at least you will win 75% and above. That is if you follow price action. And this, guys, this was a very good break and retest. Break and retest the trend line, break and retest on resistance, and then it is called what? Demand zone on the daily time frame. You'd have gotten a very good trade. Okay, guys, that is all for today. See you in the next one. Bye. Don't forget to subscribe and like the video.